Commodities. Phil, thanks for sharing part of your Tuesday morning with us. A busy morning, busy week for that matter. I wanted to get your thoughts initially on this number, a little bit higher than expected, and, well, it's going to raise some of those inflation concerns again.
Yeah, we're keeping an eye on that gold market. That's I keep looking over here at my TD platform, checking it out here, slightly positive still. So I was really hoping for that breakout to the upside on gold, but it's unfortunate. A little bit hotter number, putting a bid under the dollar index. We're seeing all the foreign currencies coming off just a touch. Yields are coming up. The stock indices, I think that, if we can get some kind of really good dip on there, I think that'd be another great buying opportunity back to the upside. But 1,800 on gold, I want to see it close above that level to continue to show some support.
Okay, it's definitely been holding that level. It's found comfort there. We're looking at the 30-minute time frame right now. The highs that we saw last week, 1819.50. You can see the trend up off the 1750 level that we saw about a week ago. But I do want to point out, as I just step away from that intraday look, here's the daily time frame. Recently found support around 1675, rallied up to 1900, where we pulled back a bit here as that dollar firmed up some. It'll be key to see if we can, again, continue to hold that 1,800 level. It does seem like a key threshold at this point. I wanted to talk commodities here with you and move on from this number because I'm not going to get too crazy about this. I always say, or we always say here, one data point does not a trend make. This is going to be something that's going to be debated, chewed on, and talked about for quite some time. But in addition to that, some of the other news that's out this morning, the IEA came out with some comments. We're waiting on the OPEC oil report, the monthly report, a little bit later this week. But the IEA said oil markets are likely to remain volatile until there's clarity on OPEC plus production policy. And while volatility does not help ensure orderly and secure energy transitions, nor, they said, is it in the interest of either products or consumers. No matter which side you're on in terms of what OPEC plus should do, it's tough to argue against that.
If you look at, inventories that we have right now, 455 million barrels versus the 5-year average, 477. That last big drawdown we had, that really put an underlying bid back on crude. Remember, crude oil was in a slide. We were about $5 off the 6.5-year high. We're going to continue to monitor, data points on a weekly basis. OPEC, there's no telling what they're going to do. I mean, they've got their own argument going on amongst themselves. And also, Russia does want to increase production. U.S. production still significantly below that 2020 high, about 13.1 million barrels. So we could really ramp up production on our end. It's just I don't see it really happening. I continue to see this to be a lagger. The supply coming on is definitely tailing the demand because it is a fragile structure. However, demand has already reached pre-pandemic levels as far as people coming in and just buying crude oil, traveling. We're seeing road traffic just back at those pre-pandemic highs.
Yeah, this is crazy when you think about it. Some of the business travel is still yet to come back into play. I mean, if we see that add to some of the demand there, we've got, schools, things in theory, normalcy returning back even more so. Schools reopening broad base across the board this fall, so we should be watching for some of those influences. We have inventories today. We've got the U.S. dollar. Inventories tomorrow, this afternoon, the API tomorrow, the more closely watched EIA. The dollar also a factor here in terms of energy prices. But let's move on because I wanted to kind of go across the board here in terms of commodities. Grains, the WASDE report yesterday, was there anything that stood out there in terms of what brought about some of the intraday volatility in response to?
Yeah, everyone was expecting a slightly bullish report and ended up being a negative tilt. So it's kind of a two-sided jawbone action. We saw 50.8 bushels per acre, slightly above the expectations. We're also seeing the weather outlooks quite mixed. The export demand is mixed as well. Those are the two wild cards, weather and export demand. You're going to want to continue to monitor that. Production and ending stocks were both above the previous month's data points. So resistance on beans, look for $14 on November beans, $12.50 on the downside as support. And then on corn, it's right around for December corn, $5.92 is your resistance point. $5.02 is going to be your support. So $5 really that kind of key level. A lot of the trend following systems had flipped to short that we monitor over the past couple weeks because of that breakdown. It was just, you get these parabolic moves like we saw in lumber, and they tend to take the escalator up and they take the window down.
We're looking at that breakdown here right now in terms of corn. You can see the gap lower that we saw again and how we currently are holding well around the $5 level. Found some support around the area that we saw basically where we were to begin the year. I just want to point out here, corn, the breach of the 50-day moving average. And as we look at all three, we've got wheat on the left, corn in the middle, beans on the right, and you can see the trio holding below the 50-day moving average. Now, you were talking gold earlier. I mentioned we were going to go across the board here. I've got my eye on gold and silver in terms of industrial metals, but I also am watching copper. I know you are as well. Still not willing to show up to the party at this point. We watch the copper in relation to indices, the crude also, the close correlation that shares, but also because it's oftentimes looked at as a bit of an insight, a little bit of information and insight in terms of demand, not only here in the U.S., but ultimately, Phil, globally. And as investors and traders, that's what we're trying to determine in terms of some of these commodities.
We saw copper, it really pumped the brakes. I mean, it's just been stuck to this 425 level. We were putting these 10 cent moves up and down 3-4 days in a row, and it just couldn't string together a few, at least in any direction. We don't care because we're traders. We want to see this market continue to go in some direction. That way we can build positions around it. But this is just choppy nature back and forth. We saw some better than expected export data here from China. Couldn't really build on it. So I think you got to kind of move on from copper, start looking at some of the other commodities. Palladium had a nice breakout to the upside, good underlying bid. Same thing with platinum. If you pull up a platinum chart, it's got a triple top going after that big breakdown on that last Fed discussion. So we like to see a breakout on platinum back above like 1125. I think that could clear the way for another move back up to 1175, 1200.